The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 5th terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, really, that is what it's all about. So let's go look at one of our tools. This is the tool I call Mastering the Negative. You know, folks, we need to welcome all experiences into our life because we never know which one is going to turn everything on. Don't put up walls out there because the walls that keep out disappointment, well, those same walls will keep out the happiness. Remember, there wouldn't be a positive without a negative. Your car battery wouldn't work, that's for sure. Your car wouldn't work, I should say. Everyone, folks, everyone has to get good at one of two things. And as we come into spring, that first thing is planting out there. Of course, it's been a little chilly down here in Florida, but I believe that the chilliness is moving away, and it's going to be nice and sunshiny and nice warm weather. But we've got to get good at two things, and that's going ahead and planting in the spring, well, or begging in the fall. So just get good at one of those two things. I suggest planting in the spring. It's a whole lot better. You know, folks, last week we talked about, the fact that there's no failure in pouring your heart and soul and energy into something that doesn't work. Rather, the failure is just simply not trying at all. Each of us, and this is the cool thing, we can turn nothing into something. We can turn pennies into fortune, disaster into success. The reason you can do so many remarkable things, folks, it's really simple. It's because you are remarkable. So let's go take a look at this remarkable market that we've got out here right now. Dow futures up about 55 points, trade out at 14,170. The ES Mini, the S&P futures, trading out at 1532.50. That's up about almost 7 points right now. NASDAQ futures up 16, even Steven up at 27.76 out there. We've got gold trading up $8 right now, up 0.5%. Silver on the move. Hi-ho silver up 45 pennies right now. That's up about 1.5%. Out at trade out at 28.95. Light sweet crude up paltry 23 cents right now, out at 90.36. Platinum up $18 around the world. There's a celebration going on over in Germany. They are up almost 2% this morning, up 147 points, and not too far behind them is the FTSE. The FTSE up slightly over 1% this morning as we speak, up 72 points. Over in Asia last night, they began the party. The Hang Seng up 22 points. That was really a flat market out there. Of course, the Hang Seng had really struggled the evening before. The Shanghai was up 55 points last night. That was up 2 3/10%, and the Nikkei up about 31 points. Our call-in number, as always, 877-927-6648. Would love to hear from you, folks. And if we start off taking a look at the market, for those of you listening in on the radio or tfnn.mobi, thanks so much for doing that. Remember, you can always catch the live stream of this show by going to the homepage of tfnn.com. Over on the right-hand side, you will see the button where you can just see three little smartphones. Click on that. You'll be able to get this show streaming live to you. And the archive of the show always being replayed on Channel 9. We're going to start off taking a look at the Dow because that's really the headline in the news out there, as well it should be. We've got the Dow pushing towards its all-time highs. Now in the cash, that would be 14,000. I think I've got it on a different page. That would be, let's start off I'll go to it. I thought I had it written down, and I don't want to switch screens just yet. What I'm looking at here right now, folks, is the Dow futures. So it was on October 11th, 2007, when the Dow futures made their highs. Now, the low of the swing point out there is 14,105. We can see that we're clearly above that. In fact, on the trading session of February 27th out there, you had the Dow close. It was the first time that it had closed inside there on the daily basis. Once you close inside a swing point, we've been looking at the weekly swing points. I thought, well, it'd be good to go take a look at the daily swing point, see what's going on out there. So it was on the 27th when the Dow actually closed into that swing point. Little test of that area on the following trading session on the 28th. Couldn't bust it down. In fact, even a further test of that on Friday. When you close inside a swing point whether it's on light volume or not. It says you want to go test the highs. Now, in the case of the Dow futures, that'd be 14,267. Right now, you're at 14,172. That'd be another 90 points up in the Dow futures. And that's where that may be where the Dow is headed. Now, what I am taking a look at, when I go take a look at the futures contract, and I take a look at the patterns back in 2007 versus the patterns here right now, with the exception of one thing. Back in 2007, after the highs were hit, we saw the bears show up for work. Right now, we don't see any bears out there, but this does not look real good. Does not look real good with regard to the energy behind it, at least the way that I'm looking at things right now, and that is looking at a live chart out here. If we go take a look at the actual cash here on the Dow, that number should be right out here. Take a look at the weekly. The high out there, it's not even up here. It's a 14,198.10. So 14,198.10, that is what the Dow is going to move after here. As in fact, shortly after we open, I presume it will be able to work its way up there. And then the key is, where is it going to close today? If you close above a swing point, volume or not, says that you want to go ahead and travel to higher prices. If we take a look at different patterns that are out here, all different kinds of patterns. We can take a look at A to B equals CD. If we take a look at A to B equals CD off of the weekly chart, we'll take the lows off that March 6, 2009. That'd be my A point. I would use as my B point, really the first major high that was made out here, which was April 30th, 2010. If we go ahead and we just simply pull that trigger down to the C point, not much of a retracement out here. Actually, A to B equals CD says 14,393, using that as a set of swing points. If we take a look at the smaller set of swing points, just how about recently off of the June 15th low, the week of June 15th, that would be the low of 12,398.48. That'd be your A point. Your B point looks like it's right up here, right around September 14th. Actually, I think in the Dow was October the 5th out there at 13,661. So that's what we'll use. And then we'll pull back down into the November lows out here. You can see already 14,108. That is your 1-to-1 A to B equals CD. We're there right now, 14,127 with the close yesterday. So you got a number of different patterns here that are setting up inside the Dow, and this is the weekly chart that we're looking at as it makes its trek up towards the 14,198.10. If the Dow, in fact, closes over 14,198.10 out there, let's take a look at where the next possibilities are. In fact, let's take a look at a swing point expansion. Let's take a look at a butterfly expansion. We come off of the May 4th, 2012 level. That's what I would first use out from the that high down to the low on the week of June 8th, 2012. You can see you got a 1.618. In fact, you've got the butterfly pattern here that's set up at 14,144. That was actually yesterday. Let's go take a look and see what that actually looks like out here. We'll go ahead and draw that pattern in for you. So you've got a butterfly pattern here right now. We're going to go ahead and draw that in. You can see just a beautiful 1.618 butterfly. Can you go above it? Yeah, and I think it's going to. Now the question is going to be, when are the bears going to show up, or are they going to show up? And we'll find out. You want to stay tuned, most certainly all day today here at TFNN. And we will see if there's any kind of reversals in the market. As I say, you close above that swing point, then prices can move higher. Here's the 1.618 butterfly. Let's take a look at other expansion possibilities out there. So let's go ahead. We'll erase the butterfly. We'll come back here. Give me a moment here. We'll go draw these expansions in. And as we draw the expansion in, we're going to take a look at where's the 2.618. Well, 2.618, oh my goodness, that's way out there at 15,447 out there. That would be in the Dow. But you got to take things one moment at a time, one day at a time. Let's go take a look at the ES Mini. As we take a look at the ES, we're going to take a look at let's switch over here to the daily chart on the ES as well. You can see right now we're taking a look at the 30-minute chart. Before I do that, you can see the 30-minute chart here moving into the extreme oversold area inside that relative strength. Right now, the reading is 76.62 out there as it continues to power higher. Let's go take a look at the daily chart, see what you can see here on the daily chart. I've got this little rising price channel. Looks to me like the S&P will go ahead and make its way up to the top of that channel. If we take a look at expansions of swing points, we'd come from September 14th all the way down to the low that came in on November 16th out there. The 1 to 1.618 says 1546.95. Looks to me like really that is where the ES Mini wants to travel to today. No, not necessarily. Could it do it today? Sure. That is only about 14 points away from where it is right now. But we'll see if it can bust outside of this rising price channel out here, clearly above the 1.272 expansion as we took a look at those swing points. Again, that was the swing point off of September 14th high all the way down to the low on November the 16th. So 1546, 1550, that is the area that is absolutely in play out there. If we go take a look at the King, let's go see what's going on inside the U.S. dollar index right now, back about 18 or 19 ticks out here. You can see that what is in play for sure on the U.S. dollar index is getting up into that 0.786 retracement level, which would create a 0.786 Gartley sell pattern. The 82.14 mark, and right now it's trading to 82.07. 82.14 was the 0.618 retracement off of the swing point high from July 25th. That high out there, maybe it was July 24th, that high out there was 84.25. 877-927-6648. Give us a call, folks. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Absolutely is, folks. Welcome back to 877-927-6648. Let's go out to West Pablo, New York, to our man Joe. Joe, thanks for calling. Thanks for holding. How are you this morning?
Fine, thanks. I'm calling about E-Trade, ETFC.
Yes. Tell me what you're doing and how I can help you.
I got scared out the other day when I thought the market was going to turn down, and then so I sold out, but I'm not at a loss still, so I'm thinking about buying back in. I wanted your view on that.
Okay, so if we take a look at E-Trade, and thanks so much for calling. Folks, again, the ticker symbol out there is ETFC. What I've got on my screen, Joe, are you able to follow along with us on Tiger TV?
Yeah.
Great, okay. So I've got we'll take a look at the daily and the weekly chart out here. Of course, they're really showing about the same thing. And that, number one, first of all, is E-Trade has been traveling in a sideways consolidation range since August of 2011. So what does that makes it, almost 2 years. So it has really been traveling sideways. And it looks like maybe when you got spooked out, you were at the high of the range out there. So I think that was a smart and advisable thing to do. And the bottom of the reason is the bottom of the range on this, is all the way down. Well, the lowest part of the range is in the $7 area. The last time that this really broke out on the daily chart, if we take a look at it here, you had a small little gap up on February the 1st out there. Just, the market, I don't know if the market really gapped up on February 1st, but it did move up with 6.8 million shares up there. And as it was pulling back on some lighter volume. So it's pulled back into a small little breakout area out here. But if you're looking at this from a longer-term standpoint, you want to take a trade on this, what I would do is I would let this prove itself to you, and I would wait, and I would pay higher price on this. I would want to see it close above this resistance area. And you'll see if I put this on the weekly chart out here, what we'll see on the weekly chart is if you take a look at the week of March 30th, 2012, you had a little doji out there the prior week, and then that following candle was this bearish engulfing. And even though the week here of February 15, 2013 wasn't a doji candle, small-bodied candle, and certainly the following week, which was the week of February 22nd, you also got that bearish engulfing candle. And then last week you had some additional follow-through. So, on the weekly basis, it was up towards the overbought territory, but you're up against an area that is pretty good, sound resistance. Now, the cool thing about resistance is that old resistance becomes new support. It's like just a change in polarity out there. So that's why I say
I had an order in right now, and I'm afraid it might. I don't know if I should. So in other words, what price did you think? Like you think it should close over that high there?
Yeah, I would like to see it. I would say in this case here, if it closes over, and it's at 10.79 right now, a close over 11.69. So we're talking another 90 cents up there. You can do one of two things. When you get up over, now that's the weekly chart that I had up. When you get up over an old resistance area, Joe, what it will typically do is it'll come back and it will test it. So, so I'm going to use here, I can use the swing point of March 19, 2012, and that high was 1150. So if it gets up over 1150, number one, you're going to want to see some volume behind it. The volume there on March 19, 2012 was almost 11 million shares. And the last time up here, let's just see, the last time up was on February 15th, just a few days ago, or a couple weeks ago, and it was up there with 2.9 million shares. So you're going to need to really see this thing prove itself to you. And then if it gets up over an old resistance area, an area that has been consolidating, you're going to want to see it stay above that level. If it dips back down in, then you'd go ahead and close out the trade. So if you're trying to tag this from a longer-term standpoint, there may be a little bit of jostling getting in and out, but I would use that line. I would use that black line that you can set up on your chart as well.
Yeah, so if I'm
as a
getting
strong
in, like,
area.
from now to 11:50, what about that? You think getting in today is good on the open?
It's hard. It's hard to say. I mean, you've gotten signals here that this thing it's pulled back into this little breakout session from February the 1st, from January 31st. So if you've got a trade in there, I would say don't let it close below the price point of 1030. Because that's in essence where it most recently broke out. So it's pulled back okay, on some decent on light volume out here. So you can go ahead and keep that trade in. Sounds like you want to, but what you're really looking for in this is you're really looking for this to get above that old resistance area.
Over
That's
1150. Thank you so much. I appreciate it.
Hey, you bet, Joe. You bet. Thanks so much for calling. 877-927-6648. Dow futures up about 56 right now. Gold trading up $9. Silver up 48 cents. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow over it. It's over its 14,198.10 number. It's right now at 14,203, up 76 points. So we got that out of the way early on. You've got the composite up 21 points right now, trading out at 3202. S&P's up 9 points out at 1534. The small cap's up 5 points as well. Leading the charge up here on the way up, you've got Google up $10 and change, trading out at 831. Cree Inc., the second in the clubhouse, up $4 right now. CREE, that's up 9% this morning. Stratasys having another nice showing out there. That's the 3D, one of the 3D printer systems out there. SSYS up 4%, up $2.50. United Rental, URI, up 5% this morning, up $2.50. Zoltec Cosmetics, I believe, ZOLT, is up 20% this morning. Boy, that is having a Zolt in the market. Is it Zolt Cosmetics or Zolt Companies out here? I don't know what it is. Let's see what they actually do. That might be easier for me to figure out here. Zolt, through its subsidiaries, manufactures, market carbon fibers. Yeah, I don't think it's cosmetics. Carbon fibers and technical fibers in Europe and Asia. So that is having a nice move. We'll take a look at that. The stock symbol ZOLT. Cummins Inc. up $2 and change. To the downside, Impacts Laboratories, IPXL, having impact this morning, down 25%. A total haircut out there. Let me see what's in the news here. An FDA issue that they've got. Let's see. What does it say? Don't see what it says specifically, but they got some FDA issue going on there and taking a 25% haircut. Williams Partners, WPZ, off 3% this morning, off the $1.50. Otherwise, everything else, fresh market is down 64 cents right now, so not a lot to the downside. Let's take a look at some of these stocks, though, that are popping and dropping. So let's go take a look at this Zolt, Z-O-L-T. As we pull that up here on our screen, you can see this thing is gapping up. Let me refresh my screen here. Give me a moment. Refresh. There we go. This thing is up, gapping up nicely with some decent volume. It had nice volume in it yesterday. Let's go take a look and see what this thing is going after. Boy, take a look at this psycho. This thing here actually went ahead and made a real high with some volume, not bad volume, going back to February 3rd, 2012. This thing gaps up. We talk about a gap. Gaps up with 4.5 million shares. The next trading session actually makes a higher high with 3 million shares, so not too bad. Let me pull this back out here. Okay, well, that was going against another area. So this stock here has a habit of gapping up and then going ahead and pulling it back. And what I mean by that, folks, I'm taking a look. I'm going back to the 2004 time frame, when this thing gapped up on February 4th, 2004. Talk about wide price spread. This thing went from the session prior was a close of $11.65, gets up to $15.37 on an $11 stock. Are you kidding me? That is a heck of wide price spread. Now, the volume behind that was 1.3 million shares. Goes ahead and makes a higher high, takes about, looks like maybe a couple of weeks to do that into February 22nd out there, and then gives it back. Now, in this case here, it didn't give it back really on volume, but you talk about a pullback. This thing pulls all the way back into October of 2011, down to $6.32 after making a high in the 15-16 level out here. The actual high was 16.05. And then it has a habit of doing this because take a look at this equity here. February 6th, was when we were taking a look at that most recent gap up, makes a high out there, does it on the following trading session, doesn't pull back to the breakout area, pulls all the way back to its swing point lows, kind of a breakout area here, going back to November of 2011. So that's what I meant when I said what a psycho stock out here, because, it should have follow through and continue to move the upside or maybe pull back into a breakout area, and most certainly that is not the case. That is on a Zolt out there. Don't know that I would want to be trading a psycho stock like that. Let's go take a look at IPXL, Impacts Laboratories. Give me a moment here to go ahead and pull that up. They are down 23% here this morning. So these guys, now we've seen some volume off of this. We've seen some signals. This is a exhaustion gap. So we'll go see what this is going back into. And good question. You might say, well, what do you mean an exhaustion gap out there, Steve? Well, if we take a look at this equity, and we'll go ahead and we'll pull this back. We'll put it on a weekly chart and take a look at it. Looks like an exhaustion gap. Somebody has to actually do the numbers. Visually, looks like it to me. First gap down. So this thing here most recently makes a high on October the 2nd, 2012. Gets up to $27.25. It has a little bit of volume off of the high. That session there was 902,000 shares. And then the next session on October 3rd creates that little bearish engulfing candle out there and does it with 1.3 million shares. It's not substantial volume off of the highs there. But what you did get, you finally got this thing blew out on October the 31st, gaps down with 3.1 million shares. So that was your first gap. Now, the gap measurement and taking a look at a three-gap play out here, you take a look at the lows, and this is what I would do. I take a look at the low, 24.18 from the session of October the 26th out here to the high of October 31st, which was $22. So we're just simply going to round for our purposes. We got $4. $4 is that first gap down. Now, I'm not going to do the actual percentage. The next gap that takes place here not too long ago, this is the session from January 22nd. Gaps down with 3.9 million shares. Now, I don't have to do the math on this. We can just visually see. If you're watching us on Tiger TV, you can visually see that's a smaller gap than the prior one. And if you're just listening on the radio or you're listening at tfnn.mobi, just have to trust us on this. But now if we take a look at today's gap. So today's gap would go from yesterday's low, March the 4th. That low is 1968. All the way to the inter-session high so far today, which is 1548. So 1548 to 19, you're looking at $4.40. So dollar-wise, more than the first gap, which qualifies. You need your third gap to be larger in dollars. If it can be larger in dollars and percentage, that is a nice thing. In this case here, you can certainly use dollars or percentage out here. And so, I don't know, maybe even qualified as a percentage play. So you do have what should be a three-gap play, an exhaustion gap on the way down. But let's take this thing back further, see what it's traveling into. Now, on the daily chart, where it's moving back to is the level of August 9, 2011. So it's made it back there pretty easily. Now, that level only has 1.6 million shares out there. And this third gap here, this maybe exhaustion gap, already has 2.5 million shares, and it's only been trading for 11 minutes. So let's go take a look at the weekly chart on this and see what it is that we are looking at out here. And this was because of some type of FDA warning on some continued manufacturing issues that they've got out here. So you'd want to go back and take a look at the actual fundamentals on this as well. But let's take a look at the weekly, and what we're looking at here is Impacts Laboratories. IPXL is the ticker symbol. So now the question becomes, where's the volume out here? So we can see that on the weekly chart. We'll just draw a line here. We can see where there's been an area of support. That's this black line going across. In fact, we'll just use the swing point low on the weekly. Takes you back to August of 2010. That is where she is traveling to. It is traveling to right now. You can see that level here on the weekly chart, August of 2010, August 13th specifically, we'll call it 4.3 million shares. This thing moves down in August of 2011 with 6.5 million shares, but still managed to hold that area. Now, that is not a hammer candle. and the candle that we're looking at going back here on the weekly chart. But you can see, and I'm referring to the August 12th level out here, not a hammer candle, a little doji out there. But what you can see on that candle, just didn't have a large enough body, is that area, and it's really what's really referred to as a high wave candle out there, which really means that the market has kind of lost its way. Of course, it found its way from a support level. And but you can see here that the bulls during that week really stepped in, because if you take a look at that long lower wick, the body of a candle is really the essence of price. But that does not mean that you ignore the wicks out there, because they do tell you who it is that was trying to take control. So it had volume to bust it out, but the bulls, whoever the bulls were in this case here back in August of 2011, certainly were taking charge and pushing it up. Now what we can see here, you got a wide-ranging bar coming into it, and the week has just begun. So, I don't know what the volume is going to be, but we'll see if this area holds. Now, if this area fails, I don't care whether it was a three-gap play or not, if this area fails, meaning a close on the weekly chart below 1446, it'll then head to its next area of support. And the next area of support on this equity is the high volume bar. But that high volume bar, folks, doesn't have wide price spread. It's just got volume. 14 million shares at a level of $7.09 to $7.75. That would be a stinger, because that would be another 50% haircut in an equity here that just simply coming back as recently as the October 2012 time frame has gone from $27 to $15 out there. Not exactly a 50% haircut, but we'll call it a 14% haircut or so. So that was on Zoltech. Let's go take a look at Apple, see what Apple is doing here today. Right now, Apple is trading up $4.60. Let's go see if there's anything behind this move here in Apple. Apple, now what's key in Apple is really broken through a support area. And that support area was at 435 level. So don't be biting this apple right here, because you might get a big worm. And I don't want you to get any worms out there, even though Apple had broken through that 435 level on lighter volume. So you're taking a look at January 25th, 43 million shares. The number is 435. And what we do know is Apple closed below that level with 19 million shares, so not enough volume. That was on March the 1st, and yesterday makes a lower low with 20 million shares. Not a lot of volume down there. So you've got an area of support, which had been acting as support out there. And when an area of support breaks, oftentimes the market will go back and it will go ahead and test that. Now it's really resistance. So unless Apple can get back above 435, any move up is nothing more than a test of an old support level, which now will become resistance. So that is key. You don't want to go ahead. You do not need to get in on this equity here. In fact, you would want to see some real signs of strength that the move lower is over, because we do know that it's got A to B equals CD down. In fact, all that Apple has really done here over the course of the last 2 days, today included, is come back and fill the gap. And that's the gap from January 24th out there. Now, let's take a look at the volume as it came into that level here. The candles get a little bit smaller on my screen, but we'll go ahead and we'll put I'll measure the volume bar out here that we're going to go ahead and take a look at. And that's the volume bar. There's really two that you'd take a look at. We're going to use the easier one, which is January 24, 2012. So there's 19 million shares. We're going to go ahead and make that the red line going across my screen. So that's 19 million shares in the gap that we're taking a look at. Apple did gap up from the January 24, 2012 level. That high was 425.10. You're at 424.44 right now. So you're still inside that bar, inside that level. Now, the real benchmark for that gap, where this thing did break out, where Apple did break out, is really the January 25th number, which is 34 million shares. So it would make sense that this may be an area of some support out here. But it's still trading, ideally it would have come back. If this was a true area of support, it truly would have come back with lighter volume than that January 24th candle, and it didn't do that. That was 19 million shares. Yesterday was about 21 million shares. Yes, it's being benchmarked against that gap up, but we've got an A to B equals CD down. And what you want to do is, Apple here continuing to hover around and trade at or near its lows out here. And if we take a look at that relative strength indicator, just really down here towards the bottom, has not been able to break above that 50% level here. Hasn't been able to break above that since the early part of January, since the market had gapped up on January 2nd out there. So Apple not giving the Qs a whole lot of hope out there, especially with the heavy weighting that is inside there. Let's go take a look at the volume inside the ETF structures out here. So let's take a look at the diamonds. We'll certainly focus on the diamonds. I think the diamonds are an area where we're going to want to be paying attention to, or the Dow as well. If we take a look at the diamonds so far in 18 minutes of trading here, you've got 1.2 million shares to the upside. So you got the diamonds, of course, gapping up this morning out here. If we go put this on a monthly basis, let's put this on the monthly. Oh, that's interesting stock chart out there. We went to black and white. We'll go ahead and change that. Let me get rid of a couple of things on the chart out here. There we go. So now let's take a look at the Dow diamonds. The swing point on the Dow that we're taking a look at is the October 31st, 2007 level. So we'll start with the monthly. We'll go ahead and put the volume along the bottom. Of course, we know that we're early in the month out here, so we're going to switch it over to the weekly pretty quick. That is on the diamonds. The number is 141.95. You're 142.03 right now. That volume, 307 million shares. But just to give you a benchmark idea, last month the diamonds did 109 million. The month before, 107 million. So that is all going into a 307 million mark, and a rejection at the end of March would be a close below 141.95 on less than 300 million shares. Let's make this a little easier. Let's go take a look at what the week needs to do out here. And let me get rid of some of the stuff that I've got on my screen here as we take a look at the diamonds. Just make this a little clearer for you. So now we're going to go take a look at the weekly volume. We're using the week of October 12th, 2007. When we get back from this break, we'll go finish out the diamonds, take a look at that. And anything else that you'd like, just give us a call at 877-927-6648. Dow's up 97, up and over its highs at 14,226 right now. Composite up 26 points, really leading the charge to the upside. We'll be right back, folks.
It's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Right now, we've got the Dow up 104 points, trading out at 14,231. The S&P up about 12, trading out at 1537. NASDAQ up almost 29 points out of 3210. Russell 2000 up 0.8%, getting in on the action, trading out at 924 right now. New York Stock Exchange up 73 points. And when we left off, before we went to break, we were taking a look at the Dow Diamonds. We're going to focus on the Dow Diamonds. Now, the Dow made its high October the 11th. 2007. So we're going to go back a little time in history. And as the Dow was making its high back then, the diamonds we're going to be taking a look at, as the diamonds were making its high back then. You know, I didn't grab the price points, so let me pull that back here. It's going to get pretty small if you're following along on Tiger TV or inside the den, but I should have grabbed that price point, so we're going to do that here right now. So the swing point, the actual swing point from October the 11th, the swing point high is 141.95. So we got 141.95 is the high. The low out there is 139.46. Why is it important for me to give you that number? Well, we're going to go back and we're going to take a look at this. So we're going to take a look at now the volume out there, 21.8 million shares. 21.8 million shares. Can you guess when the last time the Dow Diamonds did 21.8 million shares, folks? Well, I'll tell you when it was. It was as the market was crushing down back during that first part of the European crisis back in August of 2011. Otherwise, the Dow has not seen that type of, the diamonds have not seen that type of volume. In fact, the largest volume really since that August time frame came as a downdraft on November 7th, 2012, with 18 million shares to the downside. So it's important to take a look at that swing point, though, in my opinion, if you want to just truly take a look and be as technical and be as specific as you can. You want to take a look at that October 11th swing point out there, and you're looking at the 139.46 to 141.95. Volume-wise, ain't no way the Dow Diamonds are going to go ahead and have that. There was some euphoria back then. There should be a little bit of euphoria here, but this is going to be euphoria without the volume. If you take a look so far in the first 26 minutes of trading, 1.5 million shares out there. Let me see, even if I did the math, even if it could maintain this level of enthusiasm, which it can't, but if it could, it still wouldn't get up to 22 million shares out there. It might get towards 17 or 18 million. That's just doing some quick math inside my head out there. But this volume pace just simply won't keep up. Now, let's say you get a closest trade right now. The Dow Diamonds are trading out at 142.11. So if the Dow Diamonds close back under 141.95, you would have a failure on price. But let's say it closes at 141.93. Is that a trade that you'd want to enter? Is that enough of a reversal signal? My opinion is no, it's not. Not unless you certainly get a bearish candle, not unless you get a real reversal today out there. But just simply going and testing that swing point on lighter volume and closing back below it, you're still trading inside that swing point. You're still trading inside that swing point. So that's why the low of that is so important. So on the daily chart, that's why that number of 139.46 is really key. If we take a look at 139.46, that would be a close below. Let's take a look at out here. 139.46 would be a close below Friday, March the 1st out there. So that is what I think you want to be paying attention to. It's certainly what I'm going to be paying attention to as well out there, and that is on the Dow Diamonds. And that's what we're going to first watch. Now, the Dow Diamonds close above 141.95 on less than 22 million shares, which it's going to have less than 22 million shares. It can continue to run. And where's it going to run to? Well, we can take a look at different expansions, and we can take a look at A to B equals C to D. But what you're going to want to be paying attention to is you're going to want to be paying attention to bearish candles. And then as the Dow Diamonds, when it gets up above a support level or a resistance level, becomes old support, right? Well, folks, we're out of time today. My apologies. But stay tuned for the Money Masters Show. Will be up next. If you're off to start your day, have a great Tuesday. I look forward to seeing you in the morning. Take care, folks.
Yeah, it's always better when we're together.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters Show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.